Greetings to all investors and Tesla fans. The highly anticipated Tesla Q4 production and delivery data has been released, and the figures are creating quite a stir in the financial community. In spite of criticism from several experts for not aligning with financial group's consensus, Bretton Winston, head of research at ARK Investment Management, has another perspective. He believes that Tesla's Q4 results are groundbreaking rather than a bust. In the future quarters, increased production rates are anticipated, which might cause the stock price to soar above $400 in a matter of weeks. Please hit the like and subscribe buttons first, though, before we learn more about Bretton Winston and his opinions about the company. Put on your seatbelts and join us as we explore the world of Tesla's Q4 data and future projections. Director of Research at ARK Invest, a disruptive innovation-focused investment management company with headquarters in New York, is Bretton Winston. He is in charge of organizing the company's research initiatives, particularly those related to mobility and sustainable energy. Winston has offered insight on a variety of themes pertaining to innovation and finance, and he is frequently quoted as an authority on these subjects in financial news and media sites. Additionally, most people would agree with him because of his reputation in the financial industry, and the general public ought to be allowed to at least hear what he has to say. They will be able to view things differently and make a wise investment as a result. When Tesla released its Q4 production and delivery numbers, many experts chastised the company for deviating from Wall Street and other financial institutions' consensus. Bretton Winston seems to be right when he says that Tesla's Q4 car deliveries were not abnormal. The company's car deliveries rose by 40% in Q4, while the market was anticipating a drop of about 8%. According to his projections, some 60 million electric vehicles will have been sold by 2027, with Tesla contributing significantly to this number during the next 5 years. He thinks the bulk of the car market will be accounted for by sales of electric vehicles. Part of the reason for the decline in Tesla's stock price last year was Elon Musk's contentious behavior. In May 2024, Musk made a noteworthy tweet stating that Tesla will no longer take Bitcoin as payment because of environmental concerns. This caused a decline in the value of the cryptocurrency and drew condemnation from the cryptocurrency community. Due to his use of social media to comment on Tesla's stock price and other financial problems, regulators, notably the Securities and Exchange Commission, have also been watching Musk's remarks and activities. However, the firm was equally concerned and still is about the markets for its automobiles. Because of the recent reduction in the price of its electric vehicles, some investors have theorized that Tesla is experiencing a shortage of demand, particularly in the vital Chinese market. Reports on Tesla's progress in the last 3 months of 2024 have been fully updated in this and other EV markets. According to Tesla, the company's yearly car production rose by 47% to 1.37 million, and its yearly vehicle deliveries jumped by 40% to 1.31 million. But according to a FactSet consensus of analyst expectations, Wall Street was anticipating Tesla to post fourth quarter deliveries of about 427,000 units. Bretton Winston, head of research at ARK Investment Management, has countered that Tesla's stats are revolutionary rather than a miss. He continued by saying that increased production rates in the upcoming quarters might drive this year's stock price to as high as $400. However, Bretton Winston believes that whether or not Tesla meets its growth objective will depend more on manufacturing than demand. This will pass eventually, even though Tesla's demand may be declining because EV owners haven't yet realized that tax. Rebates on some of their cars are the reason they bought. Given the multiple price reductions that Tesla is implementing in the majority of its markets, it might be more cost-effective to purchase the car now rather than waiting for another promotion or for Tesla's vehicles to meet eligibility requirements. The company is introducing a new vehicle chassis that will be approximately 50% less expensive along with the Model 3. Musk revealed in October 2018 that the price of the upcoming platform would be just half that of the Model 3 and Model Y. There is therefore a lot of expectation for the new platform, even though the project has been postponed and could not be completed for the next few years, although the exact delivery date of the EV is yet unknown. Musk has guaranteed that manufacturing volumes will be significantly higher than those of the Model 3 and Y. This is due to production enhancements like the Gigapress, which molds large chassis sections all at once. The new vehicle platform was supposed to be introduced on March 1st during Tesla's Investor Day. Tesla's Investor Day, which took place on March 1st and lasted for several hours, disappointed a lot of supporters and shareholders, which led to a drop in the company's stock price on Thursday. Nevertheless, analysts maintained their general optimism in spite of this. An analyst from Deutsche Bank expressed their disappointment with Tesla's lack of details on its next-generation platform in a Friday Morning Autos report. They pointed out that the business omitted details on the launch schedule, car categories, cost points, and financial ramifications. However, the analysts also noted that Tesla has shown remarkable development and unveiled plans for certain production and technological advancements, which they think will support the company's long-term growth in volume and profit. Tesla did not talk about the cost-effective electric vehicle during the ceremony. It was initially shown off at a 2020 Battery Day event. Furthermore, no information was provided regarding the delivery schedule for the Cybertruck, the updated Roadster, or the status of the company's new heavy-duty truck Semi. Regarding how Tesla plans to work with his other company endeavors, Musk did not disclose any details. Furthermore, a Master Plan 3 document was still missing from the company's investor relations page as of Friday morning. In the end, Bretton Winton feels that if Tesla can successfully build this low-cost EV, it will once again set the standard in the EV market, regardless of the company's updates during quarterly calls or investor days. This is in line with the opinions expressed at the Tesla Ball, which previously addressed how innovation could give businesses a competitive advantage. The similarities between investments in emerging economies and current developments were also underlined. When it came to emerging economies, at Investor Day, Elon Musk confirmed during a QA session that Tesla will be opening its next major factory outside of Monterrey, Mexico. Executives at Tesla decided not to reveal the company's biggest news of the week until a few hours into the event. Still, no further information was given at the time. More details regarding the proposal were revealed by Mexican officials the next day, including the expectation that Tesla will invest $5 billion in the vehicle assembly factory in the short term and $10 billion in the prior. There will be 10,000 jobs at the factory. Situated on over 4,200 acres of land, the factory will be the biggest facility owned by Tesla globally. Musk stated at the Investor Day event that he thought certain Mexican officials were present, but he did not provide their names or positions. Thomas pointed out that Musk should have welcomed the officials by name and acknowledged their partnership more politely, especially because the new factory is crucial to both Tesla's operations and Mexico's economic future. According to Winton, the company has a lot going for it in the upcoming years, which could result in greater stock price and more demand. He claims Tesla's self-driving technology has the potential to revolutionize the industry. Following the closure of the stock market on January 25th, 2023, Tesla disclosed its financial results for the quarter and year ended December 31st. Tesla recently released its Q4 2022 financial results, showing $4.32 billion in revenue and $1.19 in earnings per share. $1.3 billion was generated in revenue from automobiles during the quarter, of which $324 billion came from deferred income from its driver assistance systems. Investors might be concerned, though, as the company's automotive gross margins of 25.9% were the lowest in the previous 5 quarters. Due to its regionally diverse production, one of the largest marketplaces in the world, Tesla is gradually moving towards an even bigger increase in cars in transit by the end of the quarter. Therefore, despite the recent setbacks, breakthroughs are undoubtedly in the works. With a ramp up throughout its global ambitions, Tesla could potentially reach even higher production rates. The company is on the verge of being able to produce more than 1 million vehicles annually at its Shanghai factory. How much do you agree with this assessment? Kindly leave your comments in the section below. Don't forget to activate notifications and subscribe. I appreciate you watching for the time being, and I hope to see you in more videos. I'm grateful. Because it makes cars in a lot of different regions, Tesla, one of the biggest markets in the world, is slowly going towards an even bigger rise in cars in transit by the end of the quarter. So even though there have been setbacks recently, improvements are definitely on the way. With a boost to its global plans, Tesla might be able to hit even higher production rates. The company's plant in Shanghai is almost ready to be able to make more than 1 million cars a year. How much agree do you have with this? Please leave your thoughts in the box below. Don't forget to subscribe and turn on alerts. Many thanks for watching for now, and I hope to see you in more movies. Thank you.